Hey, welcome. So you're buying a home or maybe refinancing. You're about to be handed one of the most important pieces of paper in the whole process. And today, we're going to decode it. We are talking about the loan estimate, and we're going to turn it from a confusing stack of paper into your secret weapon for getting a smarter mortgage.
Think about it. You get a quote from one lender with a certain interest rate and fees, and then another one from a different lender that looks, well, completely different. It can be pretty overwhelming, right? How do you actually know you're making the best choice? That feeling of anxiety is exactly what we are going to tackle right now.
And believe it or not, it actually used to be way worse. Before 2015, every lender basically had their own version of a loan quote. It was a total mess, making it almost impossible for you, the consumer, to do a simple apples-to-apples comparison. This confusion often led to some nasty surprises and extra fees at the closing table. It really was a mortgage maze.
But the solution to that maze is this: the loan estimate. It's a standardized government-required form. Every lender has to use this exact same 3-page document for most home loans. We're talking conventional, FHA, VA, pretty much any mortgage you'd get for a primary home, second home, or investment property. Its whole purpose is to give you a crystal-clear picture of a loan's terms in plain and simple language.
Now, this form doesn't just appear out of thin air. You get a loan estimate within 3 business days after you submit a complete loan application. Think of it as the lender's official response to your request, laying out exactly what they're prepared to offer you.
Okay, so you've got this 3-page document in your hands. What in the world does it all mean? Well, let's go on a guided tour and break it down page by page. And I promise, by the time we're done, you'll be able to read this thing like a total pro.
All right, page 1. This is basically your executive summary. It's designed to give you all the most critical information at a single glance, the absolute core details of the loan they're offering you.
So let's look at what's on this page. See that column that says, can it increase? This is huge. Your loan amount is fixed. It says no. But look at the interest rate and the monthly principal and interest payment. They both say yes. That's an immediate red flag that tells you this isn't a fixed rate loan. This is an adjustable rate mortgage, meaning that beautiful low rate they're showing you now could go up later. That's absolutely crucial to know.
Also, right there on page 1 is probably the most important number for your personal budget, the estimated cash to close. This is it. This is the amount of money you need to have in the bank ready to go for the closing day. It's your down payment plus all those closing costs rolled into one big number.
So where does that big number come from? Well, that's what page 2 is for. It takes that estimated closing costs figure and breaks it all down into an itemized list. It really demystifies where every single one of your dollars is going.
And this chart really shows you where you have some power. The costs are split up. You've got origination charges from the lender, then services you can't shop for, like the appraisal fee. But look at that big slice, services you can shop for. This is your chance to save some serious cash. It means you don't have to use the lender's preferred company for things like title insurance or a pest inspection. You can shop around and find a better deal.
And now for page 3. Honestly, this is your secret weapon. This page gives you the tools to make really smart comparisons, cutting through any sales pitch to show you the true, long-term cost of borrowing this money.
So what are these secret weapons? First, you've got the APR. This is a big one. It's not just your interest rate. It also includes many of the lender's fees. So the APR gives you a much better idea of the true annual cost. Then you've got TIP, the total interest percentage. This number can be a little shocking. It tells you how much interest you'll pay over the entire life of the loan compared to the amount you borrowed.
Okay, so now you understand the document. You know what everything means. Now for the fun part. How do you actually use it to your advantage? This is where your loan estimate stops being just a piece of paper and becomes a powerful strategic tool.
If you look at the top of page 1, you'll see an expiration date. See, most of the costs on this form are locked in and good for 10 business days. This is your window of opportunity. The form is literally designed to give you time to go out, get estimates from other lenders, and compare them without any pressure.
And this is where it all comes together. Let's look at these two offers. At first glance, offer B looks pretty tempting, right? The loan costs are lower and the cash you need to close is less. But wait, look at the APR. Offer A's APR is lower. That means over the long haul, offer A is actually the cheaper loan. Without this standardized form, spotting that critical difference would be incredibly difficult.
And hey, don't just take my word for it. The research on this is totally clear.
Homebuyers who take the time to get several estimates and actually compare them side by side are way more likely to save money. It is probably the single most effective thing you can do to get yourself a better deal.
You know, at the end of the day, the loan estimate isn't just about crunching numbers. It's really about giving you a sense of control and confidence as you're making one of the biggest financial decisions of your entire life. So why does all this matter so much? Because if you don't get a loan estimate or you don't understand it, you are basically flying blind. You risk showing up on closing day only to find thousands of dollars in fees you never saw coming. You miss out on the chance to negotiate or shop around for better deals. This single form empowers you to avoid all those traps, to make a decision based on hard facts, and yeah, to potentially save a ton of money.
The loan estimate really does put the power squarely back in your hands. It turns you from just a passive applicant into a really smart, informed consumer. So the final question isn't just which loan is the cheapest. It's, now that I have this knowledge, which loan is truly the best one for my financial future?